Hi everyone, welcome back to Tax Tutoring and Training. My name's Hannah, and in today's lesson, we're going to be going over what the child tax credit is, as well as some other credits for dependents. If you are having questions about if you can take the child tax credit on your tax return, or you're studying to become volunteer income tax assistance certified or IRS tax preparer certified, then this lesson will help you on your journey. As always, there's guided notes linked in the description down below. So if you have any questions or you want to stay engaged and follow along while studying, be sure to check those out. All right, let's get started. So what is the child tax credit? The child tax credit is a non-refundable credit that allows taxpayers to claim a tax credit of up to $2,000 per qualifying child. And it's a unique credit in that if the taxpayer cannot benefit or they can't claim the full $2,000, the maximum $2,000 for the child tax credit, they may be able to qualify for the additional child tax credit found on Schedule 8812. The additional child tax credit is a refundable credit in contrast to the non-refundable child tax credit that enables taxpayers who can't claim the full amount to be able to take the additional child tax credit. Now, one thing to note is that the child tax credit is often confused with the credit for child or dependent care expenses. Those are two different credits. One's for the expenses paid to care for a child, while the other is just a credit for having a child. And the credit for child tax or dependent care, it can be claimed for a qualifying child dependent or a qualifying relative dependent, whereas the child tax credit can only be claimed for a qualifying child. And if you want to learn more about that, we have a lesson on the qualifying child and dependent care expenses credit, so make sure to check out my channel on that. And we also have a lesson for dependents on what it means to be either a qualifying child or a qualifying relative. So I encourage you to check out both of those videos, as it'll make everything we cover in this lesson a little bit more clear to understand. So in this lesson, we'll be going over the child tax credit and how the additional child tax credit relate to one another. So going forward, we're first going to talk about the child tax credit. And to be eligible for the child tax credit, taxpayers must have at least one qualifying child. And like I said before, we cover it in our dependence lesson on this channel, so I encourage you to check that out. I'll link it in the description. I'll link it at the end of the video for you guys to check out. So the qualifying child must be the qualifying child of the taxpayer. And in the case of divorced or separated parents, the same rules apply as with qualifying child in the dependence rules that we went over. It's that the custodial parent usually claims the qualifying child as a dependent unless the non-custodial parent files Form 8332 and has a higher AGI. Both must be true. If the taxpayers are ineligible to take the CTC, but they take it anyway, they can be banned for claiming this credit for up to 2 to 10 years. Okay, so determining eligibility for the child tax credit. To determine whether a child meets the criteria of a qualifying child or the child tax credit, the qualifying child must meet the following criteria, meaning that they are under age 17 at all times during the tax year. So if you have a taxpayer that's coming in and wants to claim the child tax credit for their kid who turned 17 in, say, March, and they're trying to claim it for this tax year, they can't because their child turned 17 before December 31st of the tax year. So they were 17 at any time during the tax year that you're trying to file for, meaning that is not allowed for the child tax credit. They have to be under age 17. And the qualifying child must live with the taxpayer for more than 6 months of the year, again, considering the rules of divorced or separated parents. The qualifying child must also not have provided half of her own support, and they meet the relationship criteria. They're a U.S. citizen, U.S. national, or resident of the United States, and they have a valid Social Security number. Now, these are all covered in our dependence lesson, so if you want more clarification on those rules, go see that lesson. And taxpayers claiming the child tax credit, they must come to the VITA site with a Social Security number or an ITIN for themselves. But if they want to claim this credit, there has to be a social security number for the dependent being claimed. If they have an ITIN instead of a social security, we can't, VITA sites can't do the return. So you need to have a social security for the dependent that you're trying to claim the child tax credit for. Okay, now you might be wondering, well, how much can I actually get out of this credit? Well, the maximum amount that taxpayers can claim of the CTC is $2,000 for each qualifying child, but that is the maximum. To determine the actual amount, it depends on the taxpayer's filing status, modified adjusted gross income, and tax liability. The amount of the credit could be reduced if the MAGI is above the limit for filing status, modified adjusted gross income, or the tax liability that is reduced by the majority of non-refundable credits is less than the maximum CTC. That's a mouthful, but let me break it down. So the child tax credit is a non-refundable credit, meaning that any amount that you have in the child tax credit, it can only reduce your tax liability to zero. So if they have the tax liability equal to zero, they can't take the credit because there's no tax to reduce. Now, the tax liability that is reduced by the majority of non-refundable credits. So if you have a tax liability that's less, so the child tax credit is a credit taken after you take all your other credits. So you take all your other credits, you reduce your tax liability to here, but your CTC is this amount. If this amount is greater than this amount, it'll reduce this amount to zero, but it can't go below zero. It can't issue a refund because it's a non-refundable credit. So it just goes to zero. They won't be able to take the maximum CTC. It'll be reduced. And typically the MAGI is the same as AGI. It's just with deductions added back in instead of subtracted. So AGI comes before deductions, modified adjusted gross income, it's just AGI without deductions. Okay, so now we're going to be talking about the additional child tax credit. And we talked about how it is used if you can't take that $2,000 threshold for the child tax credit. And the additional child tax credit is for those who don't get the full $2,000. And then they also will qualify for the additional child tax credit. And it allows eligible taxpayers to claim up to $1,600 for each qualifying child. So $1,600 for each qualifying child if you don't meet the maximum $2,000 of the child tax credit. For taxpayers with earned income over $2,500, the credit is based on the lesser of 15% of the taxpayer's earned income that is over the $2,500 threshold, or the amount of unused child tax credit. So say you don't meet the full threshold of $2,000 for your child tax credit. Then you go into qualifying for the additional child tax credit. And if your additional child tax credit, and to figure this out, you need to know what the lesser of, you need to compare 15% of the earned income over $2,500 and the amount of unused child tax credit. So say you're 15% of the taxpayer's earned income over, so for example, say that the taxpayer's earned income of $3,000. In that case, you would take the $500, which is $500 over the $2,500. So you take the $500 over, and you take 15% of that. And then you compare that number with the amount of unused child tax credit, which is say $1,000. Since $1,000 is greater than that $500, you're going to take the $500 as your additional child tax credit. And that $500 is going to directly reduce the amount of tax you owe to the IRS. For taxpayers with 3 or more qualifying children, taxpayers might also have greater benefits if they had Social Security or Medicare taxes withheld from pay, were self-employed and paid self-employment tax, paid tax on tips not reported to their employer, did not receive the maximum amount of the child tax credit. In these cases, TaxSlayer is a software that most tax preparers use to prepare income tax returns. So when you put in the taxpayer's information that they have 3 or more qualifying children, the additional child tax credit amount may be greater than $1,600 if they qualify for any of these scenarios. In that case, as a VITA intern, just know it's because they qualify for these. That's why it's a little bit greater. And it's nothing to worry about. Sometimes they'll get additional benefits if they qualify as one or more of these, and they have 3 or more qualifying children. And they will calculate this after filling out Schedule 8812. Okay, Now, there's one other credit I want to talk about in this lesson, and that's the credit for other dependents. There's a $500 non-refundable credit for other dependents who don't qualify for the $2,000 child tax credit. And this could be taxpayers who maybe care for their parents or care for another qualified relative dependent that is not necessarily their qualifying child dependent. And in this case, they can take a $500 refundable credit. If the dependent is a U.S. citizen, U.S. national, or U.S. resident, and they have a valid taxpayer identification number, just a social security, ITIN, ATIN, etc. And taxpayers who exceed the modified adjusted gross income limits will not get the full amount, like we mentioned before. All right, guys, thank you so much. Please comment any questions you have. And I enjoyed teaching you about child tax credits, additional tax credits, and credits for other dependents. See you next time. Bye.